Good afternoon, everyone, and thank you for making time to come to our webinar today. We will be speaking about Affle India. It's an ad tech company, and it's a high growth company. I'll be taking you through it today. I'm Suruchi Jain, Managing Director and Founder at Opportune Wealth Advisors Private Limited, and thank you for making the time to come today. Just a quick look at the disclaimers. We do have positions in Affle India, and so do our clients. So please use your best judgment. This presentation is not an indication of a recommendation to buy, sell, or hold. So please use your own judgment before making a decision on whether to take a position in the stock. So while this is a high growth company, I want to caveat this by saying that investing should be more like watching paint dry or watching grass grow. It's a famous quote by Paul Samuelson. He's a famous economist, a Nobel Prize winning economist. And while it might seem like Affle India has gone up quite a bit, almost like winning a lottery in Vegas, it's gone up 40% in the last few months and doubled in the last year, and more than doubled in the last since the time it listed. It's gone up 4x. When you're actually looking at companies, you need to give them time, and you can't always predict when they will go up. With that, I'll start with our research methodology. So we follow a four-pronged research methodology at Opportune Wealth. We essentially look at industries, our preferences for asset-light industries and high-growth industries, the ones that we understand, based on my background and experience in consulting and in equity research. Within those particular industries that have good growth tailwinds, we look at winning companies. And when we choose companies, we also look at management, whether the management is clean and whether they are using best practices for running their business or not. And lastly, we look at stock price and valuations. So each company has to check all these four boxes before we actually take it into our portfolio. So going into the industry, I will just explain how the global ad space and the global internet space has been going through like a digital adoption. So essentially what this is a bell curve, and bell curve is usually the adoption curve that most technology companies and most technology adoptions take, right? So essentially what it means is the phase where there's experimentation, right? There are certain countries that are, you first go into experimentation phase where certain percentage of your population is say on the internet, right? And then at some point it's a high percentage of people in using the internet, and eventually ubiquity means ubiquitous, so like almost everyone is on the internet. So if we just plot a few countries, we can see that India is all the way down here, but all the way down here is also not too bad. It's like 41-45%. And so India is still in the experimentation phase, despite having 40% of their population on the internet. Whereas China is at 59%. And you can see UK is at 92%. So you can see essentially what this bell curve represents is from experimentation to adoption phase. It's a very quick, it's like a tipping point that is reached, where suddenly a lot of people end up, going over the top, and a lot of people get adopted. And COVID currently is that kind of a situation where countries move from just experimenting to adopting, where suddenly everything's moved online, including education, work across all age, age and economic geographies and age brackets, right? And then you can see that Japan and US is in the ubiquitous phase, where they have 94 and 95% of their population on the internet. So India is going to be our focus in the coming few slides after we speak about the world. and we'll see how it's moving. So because Affle India is an ad tech company, we will basically talk about the global ad tech market. You can see that the global ad tech market has actually been moving pretty slowly. 3.7% is the CAGR growth between 2015 to 2020. But if you see the digital advertising space, right, it's gone from 32% to 54% market share, and that's growing at a 15% CAGR. Similarly, I think what we're expecting in the coming 5 years is a 11% CAGR, but the growth could actually be much bigger. And when we say the blue part is the other mediums or the traditional mediums of advertising, which includes TV, radio, print, and out-of-home media. Now, out-of-home media in the global context, outside of India, has been there for several, more than 2 decades. But in India, I would say it's only come, about a decade or 15 years ago. So let's take the case study of US, right? Like how they went through the whole adoption phase. So in 1994 was the first like digital advertising that was born. There was the first ever internet banner, and the first ever e-commerce purchase was a pizza, right? In 1995 to 2005, they were in the experimentation phase where digital ads were born, and the likes of Adobe, DoubleClick, Yahoo, Google, Facebook all started to provide this online advertising for publishers and advertisers. Gradually in 2005 to 2010, ad tech companies similar to Affle focused on building ROI based advertising, where you could actually track who's watching the ads, how many people are clicking on it. And so that's where it started becoming a little more sophisticated. And now in the 2010 to 2020 phase, where we're in the ubiquitous phase, advertising and marketing has mostly become online, and we think even increasing adoption will happen in the coming 10 years. So if we just look at the globe and different countries, right here, the world, 2020 now and 10 years out, what we are expecting, we expect that India, you can see, is at 2.3 billion US dollars in ad tech market, sorry, total advertising market. And so we're expecting it to grow to 10x in 10 years, right? And where the world will grow at 3x, right? From 300 billion to 900 billion. And the US also will go 3x, but India will grow 10x. So this is where we think, Affle has, Affle's 50% of revenue is global and 50% is India. So of course, India will play a key role in its future growth. I'll come to that in the companies section. But now moving into India, how is India going to reach from, say, the 2.3 billion right now to 25? In fact, this 25, we would say like 2 years ago, the projection was actually only 22. But the projections moved up because the pandemic has just accelerated the digital push by 2-3 years. That means the growth will happen much faster and quicker. So if you see over here, monthly active internet users has already doubled in 5 years, from 317 million users online to 640. This is what we're expecting as of like December end calendar year. And that's a penetration rate of 46%. And 2030, we're expecting like 80%. Say, even if it's 70%, I think, the adoption phase and the growth is just huge. So coming to company, right? Affle India is the company we're speaking about. And what does it exactly do? So one thing here, right? Like Buffett always says, if you don't understand a company and what it does, then you shouldn't invest in it. So this is our attempt to, help you understand what the company does, since we already have it in our portfolio. So like I mentioned, 50% is global and 50% is India. But how exactly do they make money? Right. So I'll take an example here. Assume that there's a company or a brand called Amazon, right? And Amazon wants to reach its customers. So first, what it'll do is it'll go to its advertising and publishing company, which, for example, is Publicis Group. It's a large global conglomerate of advertising. They'll ask them to, make them an ad, and then Publicis Group decides, okay, we need to put it on the tech platform. So they reach out to Affle. So Affle has the data and the customer data, and then they can basically help Amazon reach the customer through like 2-3 different mediums, which we'll talk about in a second. And then basically Amazon is able to advertise to the customer through targeting, and then the customer purchases something from Amazon, and that's basically a customer conversion, and that's how Affle would make money. So Affle doesn't make money the way traditional advertising does, just by like placing an ad or like a fixed fee, but they actually get money for converted users. So what do they exactly do? So they basically target advertisements to internet users, and for them to actually consume the brand. So I'll give you 3 different ways of revenue streams that they have. So supposing there's a new client, right? Supposing someone doesn't have an Amazon app on their mobile phone, then what they'll do is, if that person is searching for something, then they'll constantly tell them that, okay, why don't you download the Amazon app, and it has what you need. And another example could be, supposing they're looking at buying something, then Axis Bank also might pop up as, why don't you apply for a credit card. So these are all pop-up ads which are targeted to like a new consumer who's not currently a customer, say, of Amazon or of Axis Bank. Then existing online, supposing someone already has the Amazon app, or say the Flipkart app on their phone, and they were searching for something, they haven't yet bought it, it's just lying in their cart. So then they would go for targeted customer acquisition, where they would repeatedly show, say, banners on like a page that they're visiting of that product that's in their cart, essentially making them think about it again and again, and hopefully convert to actually ending up buying that. The third is like the online to offline conversion, where say an advertiser like McDonald's wants people to walk into their store. So if someone's looking for a meal, say on a Swiggy or like another similar app, and they're looking at burgers or something, then basically the app will push the notification of, say, McDonald's is around the corner, why don't you go there and visit. So these are the kind of 3 ways in which Affle tries to target customers and help them become a consumer of the particular brand that they're advertising. And if you can see, in the last 2 years, they have made money. 87% of Affle's revenues come from customer conversions. And so if you see in FY 2019, 55, they were able to convert 55 million users to buy the product that was getting advertised. And they received like 40 rupees, which is CPCU is cost per converted user. That's what they, gained as revenue. So this is what they, have received. In FY 2020, the number was 72 million, and average CPCU was 41. So, the revenue overall from this particular segment was 2965. So I think over time, as they continue to build their capabilities, they would be able to charge a higher average CPCU. This is assuming, other competitors don't enter the space. And I'll speak a little bit about how they've been able to kind of maintain, other competitors away. This slide has a lot, but basically it's basically, this is the main point, where they say they have a database and they have predictive machine learning, which helps them repeatedly do things better. So the more ads that they deliver, the more they have growth in connected devices. There's self-learning and predictive algorithm that is running, and then they're able to deliver more and more precisely, the targeted ads. So in a way, there are strong network effects to Affle continuously doing things better for, say, like an Amazon or a Flipkart. And we've done some channel checks and noted that Affle is definitely one of the preferred companies where in the space. They are into a lot of acquisitions, because in technology you have to always be on top of everything that is required from the customer. So they do have an acquisitive approach, and in the past they've been able to acquire companies not just in India but like all across the globe, to ensure that they are ahead of the times and offering the best platforms. It's a quick expansion history, right? The company was founded in 2005 in Singapore, and gradually they set up offices in India, UK, and Singapore. They are also in the UAE, Indonesia, and their latest acquisition was in Spain, a media smart company. Apart from these 6 countries, they are also in Japan, South Korea, and Australia. Here they don't have offices, but they actually do have presence in terms of customers. So their clientele, again, they break it up into 4 business verticals. They call it the EFGH, e-commerce, entertainment, edtech. F stands for fintech, food tech. FMCG, G stands for gaming, groceries, government, and H stands for health tech. And you can see they have like a plethora of different clients, and 75% of the revenue of the company comes from these 4 verticals. Of course, most of these verticals, as you can see, are going tech heavy, and these days everything is going tech heavy. So hopefully there'll be more such categories to onboard very soon for them. So in terms of specific to India, you can see that even pre-COVID, there was already a trend where there were more and more internet users going online, from 445 million to 730 million, and with the mobile internet also penetration going up, and e-commerce as well. So all these 3 things put together give like a overall target market for advertisers and for Affle to be pretty huge in the coming years, and approximately growing at a 20% CAGR for new users. I mean, you can imagine how the existing user base will also continuously want to buy things online, which is why the whole space is going to be pretty high growth. So economic moat, this is a concept I've actually covered in my introductory presentation as well, where we basically, what I try to say is like a company has a moat, or like a castle has a water body around it. There's something that the company does uniquely which protects it from competitors, getting into the castle and taking away the profits, just like the treasure in a castle. So what is it that Affle does differently, right? There are some network effects, that means more ads, more data. So then there's more data, then more companies want to put ads there. So they basically get better and better at this entire dynamic. And to explain this in another way, Naukri.com is another company in our portfolio, which essentially does the same, right? What they do is they have more resumes, so more jobs get posted on there, more jobs, so then more people put up their resumes. So it's the same network effect that's happening here. And we think some part of their moat also comes from the relationships that they've been able to build over time, because most of these are B2B relationships, whether it's with like the large publishers and advertisers, or whether it's with their clients. And both of these create high entry barriers. But of course, the caveat here is it is a technology company. And unless they are on top of the game through their acquisitions and the best practices, someone could come and like overthrow them at any point in time. This is just a numerical way of looking at moats. So typically companies that have a moat have ROC or ROE greater than cost of capital. Cost of capital is the cost at which a company raises capital. And so one comforting factor is that the large publishing and advertising companies, right? These are some of the 4 large publishing advertising companies. And you can see that WPP and Publicis are already their customers. While they are also competitors, they are trying to compete with Affle, but they are currently not in a position to, despite having, large money muscle. This definitely requires concerted effort to do what Affle is doing, and a very focused approach, which most advertising companies are having to basically go to Affle instead of doing it themselves. That's not like their expertise. A quick look at their ROE and ROCE profile. you can see that in the past their ROCE and ROE was quite large, and with several acquisitions in 2020, it's come down a little. What we're expecting is like a stable a kind of ROE, ROCE. But even if we assume that they end up doing some large acquisitions, we don't think the ROE and ROCE will fall below 20%, or at least so we hope, because the company does have a sound management which is taking decisions in the best interest of shareholders, and we'll come to that right after. And their PAT margin also, like we're expecting like a steady sort of PAT margin in our assumptions. PAT margins could expand further, but currently we are assuming like a 18% PAT margin going forward. So even in our base case, right, what we are expecting is that PAT growth already from 2019, it has doubled. Rather, it will double by 2022 is what we are expecting. And then again, it'll again double by 2025. So this is what like our base case expectation is. EBIT margins are also quite healthy. And these are basically our bull, bear, and base cases that we represented here. Just a 1 or 2% difference in EBIT margins, but if the company gets to scale very fast and doesn't really need any more acquisitions, these margins could even expand further. So coming to management, there are essentially 4 founders to the company, which are key members of the board, and they have the right background in my mind to make Affle a success. If you can see Anuj Khanna Soham, who's the founder, chairman, and chief executive officer, he's the main person at the helm. He has 18 years of experience in tech and data. And the other 3 have quite heavily, more than 15 years each in media and advertising, which means that each of these people, Anuj, Viraj, and Madan, bring relationships with them. The B2B relationships that we were talking about, and how they can get more and more, business to flow through the company, while Anuj makes sure that things at the ground are running smoothly. In terms of shareholding pattern, 69% of the company is held by the promoters, and within the promoter group also, you can see that there are some marquee shareholders: Microsoft, Malabar Investments, Dentsu Network, Bennett Coleman. So you can see that there are 2 large conglomerates from the advertising space and Microsoft from the tech space, further affirming that the company is going to do, great things, hopefully, with such large conglomerates actually backing it. Coming to the last leg of our analysis, which is valuations. This is roughly what we are forecasting, 3x growth in revenues and PAT over the next 6 years. And we think that this is what will drive the stock price as well, from 700 and like 800 is what we expect this year, to 2600 in the coming 5 years in terms of PAT. This is just our base case. And if we even look at a PE multiple assumption, right, what our bull case assumes in 5 years is 7200 kind of valuation, right? Our base case has already been reached, which is like a 2-year out price of 3400. And our bear case, if we would say 3 years out, was 2800. So we actually started buying the company at a price of, I think, 1400 or 1800. And yeah, I mean, it's done fairly well for us since it's already at the 3600 mark. So a quick look at global peer comparison. We can see that there are similar companies globally, right? This is Affle. Trade Desk in the US is another similar competitor and doing very similar things to what Affle is. Criteo Group in Europe, Freakout in South Asia, and Mob Vista in China. And several of these companies are listed. So you can see that the PE ratio that they're trading at, like Affle's already at 107 PE. The Trade Desk is at 208, Criteo is at 17 times, Freakout is at 40 times, and Mob Vista is at 25 times. So, definitely, I think the only, competitor which is more valued is the trade desk, and, it is one of the largest in the world. So, this with that I come to the last slide. Although the price has moved from IPO from 875 to 3700, we still think there is room for upside, as I shared in my bull case. Base case assumptions have already reached, but if things could go better for Affle, given the pandemic situation, given the technology adoption curve that we are on, and so that's why we continue to hold. We will of course be watching very carefully the results of the company every quarter to see if anything is slipping up, and if we feel that things don't look up from here, then we would look at reevaluating our exit. But of course it's already done really well, and it may still have room to grow over the next 6 years. Going back to my first slide, you have to watch the paint dry, and you can't always time the entry and exit perfectly. With that, thank you so much for your time. I'm happy to take questions if there are any.